Holding trades through news. Hi, it's Charlie giving you today's video. This is in response to a question I've had saying, how do you hold swing positions when you see that there are lots of news events on the horizon? Right. So it's a good question. So I'm going to use this, just a chart here, as an example. Now, when it comes to holding on to positions through news, there's a couple of things to consider. When you're looking at a historical price movement and you're doing some testing on that, so if you said, well, okay, well, I've tested whatever pattern it might be all through here, are you testing all of the news events that happened through there as well? No, you're not. So you're testing, back testing levels or whatever your patterns are. So this is very common, people will back test a pattern that they may be looking to trade with and how much they will hold on to that pattern for. And whether it's on a fixed R basis, so a multiple of risk reward, or whatever it might be. And then once they actually start trading it with it, they'll say, oh, there's some news coming up, maybe I should close my position. And yet when you've back tested it, you've just back tested the price action. So the answer is, in answer to the question, how do you hold on to swing positions when you see there's lots of news events coming out? That's what your stop losses are for, and that's just where you have to hold on. Whatever if you're short for all of here, or you're long for all of this, there's loads of news that's gone on through here. So in fact, this is a trade I've been in since down in this section. I started accumulating a long on the euro up until up here, and there was loads of news that was going on. Some big news, CPI out of the US on that day, or one of them at least anyway. It was either that one or that was a PMI out. That was a manufacturing PMI. This was, I think, was a CPI, or the other way around. So there's been loads of big news events, and you have your stop loss, and you either get stopped out or you don't. That's it. It's as simple as that. When you're intraday trading, it's a little bit different because news can create a lot of intraday noise, and you can get slippage on your stops, which can materially affect your overall profitability, but not really on swing trading, because for one, your stops are usually a little bit further away, and therefore a wider stop means that slippage of 2 pips, for example, on an 80 pip stop loss, is not really meaning much. But a 2 pip bit of slippage on a stop loss, which might be 10 pips, that's 20% extra. So that's the difference there. So the real answer is you hold through weekends, you hold through news. When you back test a pattern, you're not back testing all of the things and events that go on. But don't get me wrong, there are times when there's much bigger events which have the capacity to create big gaps, such as next year we've got the US presidential election. So something like that would have the capacity to create big gaps. So I do think that again, there are certain considerations, but general economic news releases in the main, they're going to produce volatility, like inflation numbers and FOMC and non-farm payrolls out of the States. But you just hold on through all of that, and that's just part and parcel of trading. But occasionally there's some major events, then you might want to trim I would probably be trimming any open swing positions that I might have going into that US election if I had dollar-based or US equity-based positions going into that. I think that's just a bit of risk management in that perspective. But anyway, so just a little simple video today when it comes to swing trading. I think that a lot of the time, people who are, especially day traders, they fear so much. They fear of holding on to trades overnight even. And they certainly fear holding on to trades over weekend. when realistically they should fear themselves more than overnight moves or whatever. So hopefully that answers your question here today.